All right, are we live? Hello, hello. Just give me 1 second. Let me see if we are live and the sound is all right. And guys, today we've got somebody. Okay, we are live. Perfect. How is everybody doing? Welcome to another Make It Happen Monday. And today we have got somebody special with us. Cause man, I've been telling him to come join on the lives again and again, but mate, he is busy. So let's welcome Mr. Shamir.
Hi, how are you?
How are you, Shamir?
I'm good, and yourself?
I am great, but for everybody who doesn't know, we do talk of multiple times during the day. So
Sure,
yeah,
you do. Yeah.
like Shamir handles all Aram and Co's financials and investors and getting them the best deals and best structures and all the bling bling, all the numbers. He does that for us. So Shamir, how
Yeah.
is everything going?
Busy, it's getting there with the RBA's rate hold, which is good. Things have started picking up. Fixed rates are dropping, right? So it's a good time, to see if we can get a good comparative fixed rates in the market.
Do you think the RBI is gonna cut the rates? I think so.
Yeah, but I don't see that happening anytime soon. At least I believe, as the experts say, second quarter of next year.
Yeah,
Yeah, right.
a
So
lot of
that's
a lot of experts are saying that. Look, they were saying that next end of this year. So
yeah,
we've got another RBI meeting in September, but I don't think it's gonna happen then. Maybe start of next year.
yeah. See, that's what I think. We've been hearing it for a while now that the rates are going to come down. The rates are going to come down. There's going to be rate increase, right? August, everyone was expecting a rate increase, which didn't happen, right?
Look,
So
I believe. Look, it's just me, my experience, but I believe they do not have any other option than to cut the interest rates.
yeah, of course, right? They have to, right?
Yeah, the increase is
Staying
not
home.
an option.
Yeah. It's definitely not, but see how the things goes.
Because
Inflation is still on rise. Yeah,
New Zealand has cut their interest rates recently by 25 basis points.
yeah.
So, and look, before that, US has already done that. US and
US
they
has
have
done
cut
it.
their
Canada
interest
has
rate.
done it. So everyone is
Canada has
doing it.
done it.
Yeah.
So I believe Australia is on the path, and they've got no other option. If they want to save
Yeah,
the economy, they've got no other option than to cut the interest rates.
I agree because they are having a housing crisis right now, right?
And
Uh,
recession as well.
yeah, and the thing is, there's so many people that want to get into the houses, but then you can't because yes, you've got the grants and you've got the schemes happening, but still the affordability is getting an issue now, right?
It sure is.
Refinances are getting a bit better, right? If someone's looking into that, there are lenders who have reduced their assessment buffer for refinances,
Yes, I've
right?
heard that.
So they've brought down the assessment buffer to 1%, which is good, right? It just then means where we go, how much can we save by doing a refinance, right?
Yeah.
And what's the best strategy? Because it's all about your long-term strategy rather than a short-term strategy, right? We need to, it's more about talking to your broker and seeing, you know, what's your plan. If your strategy is to leave a legacy for your family or for your kids, right?
Yep.
Then that's a different strategy that we need to sit down and have a chat about, right? Your retirement strategy, right? How to pay off your mortgage as quickly as possible, right?
Yep.
Yes, we are at times where interest rates are at the peak, right? But 2 years back when interest rates were lower, it was easier. People were having more surplus going back into their home loan, right?
Yep. Yep. Yep.
So with surpluses going back into the home loan, you're basically reducing your home loan term,
Yeah,
right?
makes sense. No, 100%. 100%.
So
And
that's what we need to do, and that's what we need to understand is what that right strategy fits because everyone's got a different, what do you say, circumstances, right?
yeah, and different
Uh,
goals.
go different goals, right? Different goals. Building your portfolio, either that could be by buying a negative gearing property, right?
Yeah,
Or buying a positive gearing property, right?
yeah.
Or
Look,
just buying something.
yeah, yeah. Look, one thing that a lot of people know about me and my strategy and what I believe is in, and that is cash flow.
Yes,
A
yes,
lot of people have a strategy not of making money, not of building that wealth, not of that capital growth, but it's a tax strategy.
of course. So
Look,
you
I
you
believe if you're
need that
making,
cash flow, right?
look,
If you,
cash flow is king. And look,
yeah,
you as the finance guy, you would agree with me. I hope you do.
yeah,
But you would agree that uh, the banks, they see cash flow, they prioritize cash flow more than cash.
yeah, right. So it's like cash flow is important, right? Again, as you said, every client has got a different goal, right? And
Yeah.
that cash flow is in, especially in today's market, in today's environment, right? Cash flow can help you pay off, reduce your home loan,
Hmm.
right? And you can, by making an extra, say $500 for, if you've got a loan of say 650 balance, right? And if you do a $500 extra by cash flow, you're reducing your loan term from 30 years to say, you're shaving it off by another 8 to 10 years, right? So cash flow properties are good, and that's what we need to do. That's what the strategy needs to happen. Is how is that cash flow helping you, right? Not only that, it's all also about what tax benefits you're getting, what tax deductions you're getting,
Yep, yep,
right?
yep.
We need to look at that, right? Because if you are making more, if your combined household income is more than 180 or 200, you're on a high tax bracket,
Yeah, you are
right?
100%.
So again, if your goal is that, then we look at negative gearing properties. If your goal is paying off your mortgage, then we look at positive gearing properties, right? So it's different goals, different circumstances in that, right? And retirement, thinking about what you want to do in the next, by retirement, how do you walk away from that, right? Is by, you could also look at possibility of buying something in your SMSF,
I
self-managed
was
super
coming
fund,
to them. I was coming to
right?
that when you said retirement. I was like
Right?
SMSF.
Right? And
What do you think about
SMSF
that,
again,
Shami?
right? So SMSF again, like, as a mortgage broker, can't say much about it, but you need
We
a
we
financial
we
planner.
we really need to give that disclaimer first
Yeah.
that we are not financial advisors and
Right.
this is not a financial advice.
And you need to talk to your financial advisor to get that right advice, right?
100%.
But in a nutshell, it's, if you've got a 200,000 of super balance right now, right? And say in 10 years, your super balance is not going to be 1.5 million, right?
No.
Again, talk to your financial planner about it. I might be wrong, but but buying a $550,000 property right now with today's capital growth of 7%, right? I'm being a bit more conservative. We're looking at a $1.5 million walk away with it, right?
Look,
Um,
the super right now is around what? 11.5%.
yes,
11.5%. So look, in 10 years if you got a $200,000 super right now, in 10 years you're touching what? 550
yeah,
in 10 years
right.
time.
And if you buy a 550 property now, right, in 10 years, that could be over $1 million, right?
Exactly. You basically
So,
leverage the money.
right, you leverage the
Leveraging the
money.
money.
The idea of super, again, now with super, keeping in mind within buying within your SMSF, there's no out of pocket, right? So you're not
Yep.
dipping into your savings, you're not dipping into your, or your home loan or anything. It's all about your contribution, the employer contribution, plus your rent, right? These two covers your expenses, right? And it's just more income coming in, less expenses gives you a massive cash flow, right? So when you've got a cash flow of say $14,000 or $10,000 a year, right?
Yep.
That cash flow goes back into your mortgage, when you SMSF mortgage, right? And you shave off from 30 years to say 20 years or 18 years of 15 years, right? Again, that's a strategy that we can sit down, talk with the financial planner, with your mortgage broker. Is like, if you're retiring in 10 years and you want to buy a property and you want to be mortgage free with the SMSF, then what's the right strategy? Do we do extra contributions, right?
Yep.
Do we do voluntarily contributions to bump that surplus? You
Or
already
you
have
or you find the right asset,
you find the right asset, right? Because
right kind of
yeah,
real estate.
because the ideally what you want to do is make sure your super loan is paid off by retirement,
Yep.
right? That's why there are lenders out there in the market. There are brokers, they do offer interest only on your SMSF loan, right? Which I advise not to do because the idea
Isn't
is
that
to pay
stupid?
off the mortgage,
Yeah,
right?
that's what I'm saying. Isn't that
Right.
stupid?
Well, it's again, it really depends on people's circumstances again,
Yeah.
right? But if you want to do in super, if you've got a good, healthy super balance, right? The idea is to keep it principal and interest and pay it off,
As
right?
soon as possible. Yeah.
Right, as soon as possible, and that can be done with your contributions, rent, and that gives you the surplus,
Or even
right?
not even if as soon as possible. If you know when you're retiring, you know the timeline. Let's say
Yes,
you want to retire or you're retiring in 15 years,
yes,
for example. So we structure it in a way with extra
yes,
contributions or the right type of asset or
yes,
the whole structure basically that we need to pay off the mortgage in 15 years.
yes, right,
So then
and
when we are retiring, we've got no mortgage left.
right,
Instead of
and
going on
I
interest
also
only and having the mortgage at the end of the day.
no, you don't want that, right? That's something that I do not advise. Again, you need to talk to your financial planner, depending on your circumstances, what
100%.
they say, right? And also, when it comes to lending, right, SMSF lending is different to residential lending, right? Self-employed can do it, right?
Okay.
Self-employed can do so say purchase something in SMSF, right?
But
Self-employed
self-employed
have
are
got,
doing their own contributions, right?
yes, they're doing own contribution, or because you can backdate your contribution,
Okay.
right? So you can backdate up to past 5 years and backdate your contributions, right? So if your contribution cap is 27,000, for example, right? You can backdate that by 5 years and put a lump sum money into it, right?
Yeah, okay.
So that's something, right? But again, if you're a young couple, you don't need to do that,
You don't want to do
right?
that, yeah.
Yeah, you don't want to do that, right? Because you've got other things to worry about, right?
Yeah.
Then you're super, right? But if you're say 10 years away from retirement, or 5 or 8 years, and you want to really push that, then there are options, right?
Yeah.
There are some lenders who would even do low doc for SMSF, right?
Okay.
So we could even explore those opportunities. Bit non-conventional, bit a bit harder, but yes, there is that product there. There's an option there, right? And with your super, the way I advise is to minimize, have the minimum loan, right, and put all your super money into it, right? Obviously, you need to keep some money in for the insurances and everything, but we want to make sure that you've got the minimum balance of loan when it comes out with the super SMSF loan, right? There are lenders who would go up to 90% also in SMSF,
Okay.
right? Yeah, so you can go up to 90%, right? But again,
So what's the drawback for that?
you've got a higher loan. That means you need more time to pay it off, right?
And those you need to get that extra contributions as well.
Extra
But you can't
contributions, right?
because
Yeah,
there's a
right.
cap on that.
That means your surplus comes down. Again, that can work for some people, right? And for some people they can't, right? My The way I do structures loan is I always keep it. I want to keep as much lower the loan amount
Yeah,
and
okay.
put more money into your super, into the purchase. Right? There are costs associated. You need to keep in mind there are loan costs, right? That will be, on a normal residential loan there won't be costs, but on the SMSF loan there are loan costs. There is the establishment fee, right? You know for setting up that SMSF, right, for setting up the
Okay.
bear trust and everything, for that advice, that there is a cost there, right? But again, all these costs do not come from your savings or pocket. They all
They goes for
are
all
from
from
the
Cuba.
super. Yes.
Yeah, and there is an annual cost as well for super for the audits and stuff and
Of
for
course, right?
legal
So
costs.
I usually keep $3,000 for regulatory cost,
Yep.
expense, right? And I keep $5,000 for general costs, right? So general costs would include your rates, notices, right? Your body corp and all those other stuff.
Yeah, and it's amazing how a lot of people still don't know that they can invest from their
Yes.
super, and
Yeah.
they can basically leverage the money, because the whole point of buying investments is that the money should work for you,
Yes. Right.
basically.
And there's a lot of misconceptions about super also. Right. Yes, you've got 200,000. Do you want to go buy shares or you want to go buy property, right? From your
Yeah,
super, right? So if I ask you if you've got money, would you go buy shares or property?
me property 100%, because we got
Yeah.
to look at, we got to do the risk analysis as well.
Yeah, right. So those are those questions also to be asked, right? So there's a lot of misconception about super. A lot of people don't know that these things exist. A lot of people think it's very hard, right?
Yep.
It's impossible. You need to have a balance of 500,000 only, then you can do it. Right? A good healthy balance of 200,000 can get you a good property, a good
A combined balance, family, if your
yeah,
partners, couples.
combined, right? And can give you a good healthy property with high capital growth and a high rental yield.
Yeah, and up to 5 people can buy an SMSF together.
Well, yeah. You
Yeah,
can buy
yeah,
it as a trust. You can buy it as whatever you want to set it up.
that's correct. Look, I think we really don't want to go more in detail about SMSF.
Yes.
Could that be too much?
Right.
And plus, we are not financial advisors.
Yes. Of course, we're not. Yes.
And look, everybody who's watching, either live or a replay, you've got the chance. You've got the finance guy in front of you. Comment your questions, or even if you're gonna watch it as a replay, just send a DM, and I'll make sure Shami comes back again.
Yeah.
It's
Yeah,
he's a
happy to
really
help. Right.
he's
You've
a
got a
really hard
question.
guy to he's a really
You've
hard guy to get on.
you've
But
you've
yeah,
got questions about your super. You've got questions about positive cash flow properties, negative cash flow properties, right? Just get in touch, right? Let's do a strategy. Let's do a session. Let's do a good 1.5 hour session and understand, what your
goals
requirements
are.
are, what your needs are, right? And where do you need to be?
Yeah, and 100%. That's the most important thing. But yeah, look, everybody else who have questions, comment below or send me in the DM, and I'll tag Shamir as well. So if you want
Yeah,
to talk directly to the guy, I'm more than happy. Not a problem at all. And I think that's enough for today. It's already too
yeah.
long. People are gonna get bored. So thank you
All
very
right.
much, Shamir, for coming
No
on
worries. Thank
today.
you, Asha. Thank you.
Please come. Please
Yeah,
join after every
100%.
week or fortnight, mate.
Then it's a commitment that I need to start giving you now.
Or maybe after every other week. I'm happy. Not a
Every
problem at
fortnight,
all.
yes.
I don't
We'll do
want you to
something.
come every week.
No,
All right.
sounds good.
Thank you
All
so
right.
much, Shamir. And
Thank you.
for everybody else, have a great week.
All right. Thank you, guys. Thank you. Bye bye.
Yeah. All right. That was good. That was actually good. Right. If you have any questions, any finance questions, just shoot me a DM or type in the comments below, and I'll make sure Shamir answers all those questions. Till then, I'll see you next week. Have a great week, and ciao ciao.